And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 28th of January 2024. I'm going to be doing the weekly market review, starting with the DXY. Here we have the weekly time frame chart. You can see how we traded to the bearish order block mean threshold. We traded to it, and we have the encroachment of the last week premium wick. You can see how price respected it regarding to the bodies. The wicks just did the damage by taking previous week's high, but the bodies respected the encroachment. Now, next week, as I mentioned, my last line of defense is the bearish order block mean threshold. If we get any closure above it, it's likely going to be telling me that we're going to be attacking the relative equal highs up there, or else we'll be trading lower to take out the sell side liquidity, and the sell side liquidity, which also just below it resides this fair value gap. Going to the daily time frame, you can see bearish order block, price traded to it. You can see that this daily time frame fair value gap, price has traded to it. You can see the bodies are respecting it, and they are just mohawks above the fair value gap to engineer liquidity and take out the buy stops. Any closure above the bearish order block mean threshold on the daily time frame is likely telling me that we're likely to see up higher prices attacking the relative equal highs and work inside this fair value gap. Otherwise, I'm expecting price to trade up lower, to trade down lower, attack the sell side liquidity. So that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see how now when I'm going to be viewing the NQ and Dow, you will see that ES is the sixth sister, because NQ and Dow has already reached to their buy side liquidity objectives, which is the all-time high. But ES haven't reached to the all-time high yet. So we have this buy side liquidity, which is the all-time high, which comes at the 5,029 and a quarter. This is going to be my target as a draw liquidity, the buy side liquidity, draw liquidity. This is my objective. We have a fair value gap that was created as a result of last week's trading between this candle's high and last week's candle's low. There's a fair value gap, and there's a weekly bullish order block. I've mentioned it when price was digging into this fair value gap. I mentioned that this is going to be a futuristic bullish order block, and we in fact seen price treat it as a bullish order block and trading from there to the upside, reaching to the buy side liquidity. Going to the daily time frame, you can see I also mentioned all of these things when we traded lower. Many people have looked at this as a bearish breaker and traded this as a pattern to go short, but we in fact, because the context was higher prices and we were looking for higher prices, as a result we've seen price just rally up higher. Now you can see we have a fair value gap here between this candle's low and this candle's high, and we have the bullish breaker. Price can retrace, work inside this fair value gap and the bullish breaker and the weekly bullish order block, also the all high. So many things are influencing price to being supported here. So seeing support, it's not support or resistance. Like when I look at this high, it's not primarily like a resistance turned into support, but it's more of an area where price is going to be sensitive. It's an area where smart money are going to be accumulating longs, so price can trade down lower. Many people are going to be looking at the low time frame and they're going to be shorting this, thinking that we've already topped up. But when we trade lower into this fair value gap, all I'm seeing is an opportunity to go long and target the all-time high, which is the buy side liquidity. So we have the fair value gap, the daily time frame fair value gap between this candle's high and this candle's low, and inside that area we have the bullish breaker, the weekly bullish order block, and the old high. We know that old high, when traded above them, we can treat them as discount BD arrays, and in fact we can see that next week price can trade down lower, trade to the this area, the BD areas that I've mentioned, and then trade up higher, attack the all-time high. So that's gonna be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, price has attacked the all-time high on NQ. This buy side liquidity has been purged at the 17,706 and 3/4. We've attacked the buy side liquidity, the all-time high buy side liquidity, and then we retraced lower. You can see that we have created, as a result, the fair value gap, and we have the bullish order block, the weekly bullish order block. Going to the daily time frame, you can see the bullish breaker, fair value gap. The same thing is mentioned. I want to mention something that you can see when you compare NQ to ES. You can see that NQ is now the strong sister when compared to ES. And even in the last year, we've seen this event takes place where NQ is going to be the strong sister, and ES is going to be the lagging one. It's going to be the sixth sister, where it's going to be lagging to reach to the points or to the objectives that NQ has reached before it. So in this case, price has reached to the all-time high here on NQ, but on ES it hasn't reached to the all-time high yet. So we consider ES as the sixth sister and NQ to be considered as more of a strong sister, because it had the liquidity needed and deserved to reach for this liquidity pool, because there's more interest in this market when compared to ES. So going to the daily time frame, you can see the bullish breaker, fair value gap, and the weekly bullish order block. We also have the fair value gap that was used as a drawn liquidity. Now we can look at this as an inversion if price wants to continue running up higher. For your info, even for me and even for my mentor, when we're trading at the all-time high, it's a new discovery. So it's not something that I can teach you, because even my mentor has mentioned something to me as it is a new discovery to me. So I'm gonna be saying the same to you. It's a new discovery, and feel free to look into it, study it, and see what you can do with it. But mainly, we don't like to pick tops and bottoms. So when we're in a bullish market, we're not trying to pick the top to catch it, or if we're in a bearish market, we're not trying to pick the bottom to long it. We're just trading with the actual order flow of the marketplace. If we get a loss, let's say now we're just looking for longs. If price trades below this low or even below this low, we have a market structure shift, break of market structure that is going lower. We can see an extended trading. Price can continuously trade lower until at least we reach to this fair value gap if we break below this low. Otherwise, we're continuously looking for higher prices. This doesn't mean that we're only looking for higher prices, because as I've mentioned on ES, on the daily time frame, price can retrace, and then from here we can buy and aim at the all-time high. Now on NQ, it's not really the case, because we've already took the buy side liquidity objective, which is the all-time high. Now we formed another high. Price can retrace, work inside this fair value gap and the bullish breaker, and then run up for this buy side liquidity. So in bullish market, as you can see from roughly mid-September or the beginning of November last year and up until to now, you can see that we've been in a bullish market, and it has been about 3 to 4 months now. Now going to the next month, which is going to be next week, we might see some shift in the marketplace to trade lower for a period of time. This doesn't mean that I'm looking for shorts or I'm expecting lower prices. We're holding the same bias, we're holding the same narrative, unless price shows us the signs and the characteristics of a change in the market sentiment or the break of market structure. When we see that on the daily time frame, we know that price is setting a play to trade lower for the next 3 to 4 months. So when we break below this low or below this low, we know that for the next 3 to 4 months we can look for lower prices, at least below the sell side liquidity, and work inside the fair value gap right there. Even on the daily time frame, you can on ES, if price wants to keep this all-time high intact and wants to trade lower, it can take out this low. We have relative equal lows here, and it can reach to this fair value gap, and then from there it can decide, does it want to continuously trade, does it want to continue trade lower to take out this side liquidity, because when you trade with this fair value gap, we have a bullish breaker here. These consecutive up close candles needs to be considered as a bullish breaker. So when price trades to this low, take out these relative equal lows and trade to this fair value gap, it has two choices. It can either reverse and run up higher for the buy side liquidity, or it can continue trading lower to the sell side liquidity. When you reach to the equilibrium, because if you measure from this low to this high, if we top here, you can see that roughly this is the equilibrium level. So when we're trading at equilibrium, it's best that you are away from the marketplace, because price has the chance or has the opportunity to go lower as much as it can go higher. So it is not in your favor to trade when we're at equilibrium. So you wait for price to show you the signs and the characteristics that it wants to reverse or it wants to continue trading lower. And then from there you can see, so if we trade below this fair value gap, and on the daily time frame we get a closure below it, and the next days we can see that price is just treating the low of that weekly fair value gap, which is going to be considered as an inversion fair value gap. Price treating the low of that inversion fair value gap as support, as a resistance. Then we can expect price to continuously trade lower, attack the sell side liquidity. So it's not a matter of I know where the market is going to be going for the next year. It is more of I'm working with what the market is doing at the moment, and I'm trying to accommodate myself with the market order flow, the market structure of the market, and trying to read it to the best. Like these are the weekly reviews where I'm trying to anticipate the next weekly candle, how it's going to be forming, and where's my target. So if you look into and study my weekly reviews, it's every time I'm telling you that I'm expecting price to retrace into this and then run up higher to my objective, which is the all-time high. It's the same thing has been done in every asset class that I've been covering and I've been sharing with you. So that's going to be regarding NQ. We're continuously looking for high prices until we've been shown otherwise, and I don't mind taking a loss. And for your info, I'm not trading now until next week, the second Tuesday of February, where I'm gonna be resuming my trading activities. But for now, I am not trading at all. And even if, let's say, even if we're at March, or we're in a time where I can't trade, I will be looking for longs, because I don't mind taking a loss and being proven otherwise, because that loss is gonna be it's like a premium that I paid to tell me what is gonna be the direction for the next 3 to 4 months. So that's gonna be pretty much it for NQ. Going to Dow, here I'm doing the continuous contract and I'm viewing the weekly time frame chart. You can see that we have attacked the all-time high buy side liquidity. I've mentioned this months ahead, when we were trading at this area right there months ago. I mentioned when price has treated this as an inversion, I told you that we were looking at these relative equal highs, and I drew your attention to these and we took them, and then we consolidated there after we took the buy side liquidity, which is a characteristic and it's a sign that when we consolidate at the buy side liquidity, it's likely that we're going to be attacking the higher objective. And when we consolidate at the sell side liquidity, it's likely that we're going to be attacking a lower objectives. Regardless of that, we can see that how we attack the all-time high. Going to the daily time frame chart, you can see that I draw your attention to the bullish breaker last week. I told you that I would be considering it as a bullish breaker because it is the highest up close candle that started the run lower, the swing lower, to take out the relative equal lows and walk inside the weekly fair value gap, which is this weekly fair value gap between this candle's high and this candle's low. we have the weekly fair value gap. So the candle that actually took out these relative equal lows and walk inside the weekly fair value gap is to be considered this low. And what has started this swing low, you can see that this up close, this is the high, yeah, sure, but you can see that this is pretty much indecisive and it doesn't have much body. So I would not be considering it, even if it was, if you zoom in and you can see that this is an up close candle, I wouldn't be considering it. So I'm looking for the highest up close candle with a relatively large body. So you can see that this is the highest up close candle with a relatively large body. Price has retraced, walk inside the bullish breaker and the fair value gap, and then rallied up higher, took out. Now on Monday, price took the buy side liquidity, price retraced, and then on Friday, price has also taken out one more time the Monday's high, and you can see how we closed just below the all-time high. So in a world or in a scenario where I can do my trading activities, because right now I'm not trading until from the second week of November to the second week of February. I like to stay away from the marketplace and take that time as a vacation and just read the markets from the high time frame standpoint to get a feel of what the market is trying to do in the future. But regardless if that's a setup that I've seen, let's say a month later, I would take it, because it is actually a setup that it does resonate with me. So, and you can see our price tagged the buy side liquidity, and then we closed there. As I've mentioned, we don't pick the tops when we're in a higher, or like when we are in a bullish market. We don't pick the tops. But you can see when you're studying this market, you can see that we've rallied up higher for the last, you can say, 3 to 4 months. And then after we rallied up higher, price consolidated just below the all-time high. And then what does it do? It took out these relative equal highs that were formed, these consolidation highs. It took them out and it attacked the all-time high buy side liquidity objective. So now I'm not trying to let's say anticipate low prices, or I'm picking the top, but it would be reasonable for me, and this is what I would be expecting, price to trade down lower and take out this sell side liquidity, because there is nothing up there that price would want to trade to it. So the market is continuously seeking liquidity, whether it was on terms of buy side liquidity, sell side liquidity, or it can also be the imbalances, the fair value gaps. So now price has taken the buy side liquidity, which is the all-time high, and it has already taken the Monday's high. So, and there's nothing here that would want to balance it out, let's say. But we have this sell side liquidity, we have the fair value gap, the rest of this fair value gap, and we have these sell side liquidity. So just think about this as consolidation. We took out the buy side liquidity, and then we take out the sell side liquidity. So many people here would have bought and they're holding. There's nothing wrong with that, but you must know that what you're aiming for, you must be really nimble with your target, because there's not higher targets or objectives that you can target. There's nothing up there. We've already taken the all-time high. So after this consolidation, we took out the buy side liquidity. I would expect price to take out the sell side liquidity, form a bearish breaker, and we can see a run lower for the next 3 to 4 months, attacking at least reaching to this fair value gap, which is just above this bullish breaker. And then from there we can decide if price wants to consolidate at this bullish breaker for a period of time, and then it would show us the characteristics if it wants to continue trading lower and attack the sell side liquidity, or reverse and attack the buy side liquidity. But as you can see, after 3 to 4 months, we can expect some kind of a quarterly shift that can happen in the marketplace. When we're trading from higher prices, it's expected to trade lower to generate interest in the marketplace for people to go short and long, depending on the market sentiment and situation. So that's going to be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see that price is just showing lower prices on EU, it hasn't really attacked the sell side liquidity. You can see how price has just wicked to closely to the constant encroachment of that weekly fair value gap and retraced from it. You can see the bodies are has closed just above the weekly fair value gap. Although we have closed above the constant encroachment, now I'm looking at this and monitoring it on the daily time frame and on the low time frame to see if price wants to treat this as resistance that can trade or send price lower to the sell side liquidity. Otherwise, if we trade higher and treat the constant encroachment, this constant encroachment as support, this would tell me that we're likely to see higher prices. And especially if we look at the constant encroachment of that premium wick and we treat it as support after we trade above it, this is going to be telling me that we're likely to see higher prices finish the unfinished business at the buy side liquidity and this buy side liquidity. Going to the daily time frame, you can see how we have closed this daily fair value gap. A little bit of mohawks here, attacking the daily inversion fair value gap from this candle's low to this candle's high, and digging into the weekly fair value gap close to the constant encroachment of that weekly fair value gap. So now, as I've mentioned, I'm pretty much indecisive on EU. I'm looking and I'm wanting higher prices. But this is what I'm favoring, but I can be wrong and price can just trade lower and attack the sell side liquidity. But I'm looking for higher prices. Now price from here can just trade up higher because it has filled everything. You can see that this fair value gap, it has been filled. There's nothing pretty much, even this, there's no fair value gap here. We just have the sell side liquidity and we have the rejection block. So if price wants to trade lower and reach the rejection block, it's likely that it's going to be taking out the sell side liquidity and pretty much trading lower. So that's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see that the weekly constant encroachment, the discount weekly constant encroachment, the weekly constant encroachment of that discount wick, it has been treated as support. So we'll see if price wants to continue trading up higher. But you can see that pretty much since, this is the reason why I don't trade from the second week of November. You can see that after that move has happened on the second week, you can see that pretty much from there and until now, price is just being in a range. It hasn't been trading up higher, it hasn't been trading up down lower, it's just been in a range. And this is one of the reasons why I don't like to trade from the second week of November to the second week of February. You can see that from the next week, we will be seeing movement, and if not the next week, the week after, but surely in the next 2 weeks, we're going to be seeing some movements in the Forex market, because there's some things that happen between the second week of November to the second week of February that hold price or hold the markets in some kind of range. But you can see how pound has been trading in a range since the second week of November. Now, I've mentioned going to the daily time frame chart, you can see how price took out the sell side liquidity right there. So it has swept the sell side liquidity and then it has traded up higher. When it was trading up higher, it has treated the weekly constant encroachment as support. So sell side liquidity swept, buy side liquidity is the next area that I'm looking at. So we have relative equal highs and we have the buy side liquidity. And if price wants to trade up higher, because if price would want to trade up higher, we have the buy side liquidity here and we have the refined fair value gap, which is going to be treated as drawn liquidity, and ultimately the external range liquidity, this buy side liquidity. So this is what I'm looking at in terms of for pound USD, or also known as the fiber. I'm mainly looking for higher prices because we've already swept the sell side liquidity, so there is no reason for price to trade down lower unless it wants to trade down lower and it wants to continuously trade down lower. But we have a lot of liquidity that is residing above these relative equal highs and this buy side, especially this buy side liquidity. So if price wants to trade lower, I don't think it's going to be trading lower without taking out these buy side liquidity. So at least it will take them out and then it will trade lower if it wants to trade lower and have the next 3 to 4 months trade lower. But as I mentioned, these areas, they must, they're a very suspect area for me. So I don't think smart money are going to be, or the algorithm is going to be keeping them intact and just trade lower. I'm sure that price is going to be just running above these highs, this price had liquidity and this price had liquidity, and then trade lower if it wants to trade lower. And what I'm expecting is just price to continue trade higher, attack this buy side liquidity, the refined fair value gap, and eventually the external range liquidity, buy side liquidity. So that's gonna be pretty much it for this weekly review. I hope you find this one insightful. I just want to state that on Wednesday next week, the 31st of January 2024, we have FOMC interest rates announcement at 2 p.m. and I believe at 2:30 we have the conference, which is the meeting. So it is very important that you don't try to gamble, you don't try to trade ahead of it, because there's one quote that one of my friends has mentioned. It is like, when you're trading ahead of red folders, just like NFP, non-farm payroll, CPI, or FOMC interest rate announcement, these are the main ones. When you're trading ahead of them, it's like you're standing ahead of a moving train moving towards you. So don't try to put yourself in that situation. Avoid trading ahead of those events, NFP, CPI, and FOMC. And I try every month to live stream those events, to study them as a liquidity case study, to study them, to understand how liquidity is being built above and below the marketplace, and how it's pretty much how smart money and the algorithm reach for the buy side liquidity, sell side liquidity, and balance out the fair value gaps. So it's very important to be careful on the 31st of January, which is next week on Wednesday, because we have, as I've mentioned, FOMC interest rates announcements. So that's going to be pretty much it for this weekly review. I hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.